We are back and we're joined by Grant White, Portfolio Manager and Investment Advisor at IA Private Wealth. Grant says it's not time to chase headlines, but it's time to be selective and deliberate about portfolios. Grant, it's great to see you. Thank you very much indeed for joining us.
Always my pleasure, Andy. Great to see you as well.
Can we start off with these TD earnings? It was a beat in the latest quarter. We'll put up the stock, and there were fewer provisions than expected for souring loans. Shares jumping almost 4%. What jumped out for you in the quarter?
Yeah, I mean, I think this is definitely a good report from TD. I mean, they're heading in the right direction now. We still have TD listed as a hold, and as I've said many times when I've been chatting with you, I don't like drama in my banks, and TD's had too much drama over the last couple of years for my liking. But what I really like about what we're seeing now is they are moving out of that drama. I believe that they're moving out of that drama. My concern still going forward with TD exists in that I think that they're going to be struggling for growth, and particularly in places where we want to see growth from the Canadian banks, and from our end, we're looking for that on the U.S. side of the border. So I think TD naturally, just because of what has happened, is going to struggle with respect to that in terms of growth going forward. But I'm very pleased to see this report. I'm pleased to see that they are heading in the right direction, and I think they've got a better handle as to where their company is going from a management perspective, and so I'm excited about the prospects for that. We're not selling it. If we have any positions holding on there, we're holding on to it. So I think TD's heading in the right direction. But in saying that, like I said, I think growth might be a little bit slower than what we'd like to see.
Yeah, just on U.S. retail, loans shrank, deposits shrank, but Canaccord's impressed by the control of expenses, the efficiency ratio better than expected there. But TD, you're not biting on that stock right now.
No, we've had a lot of calls on this one since they've gone through the turmoil, there's been calls coming in for it, and just, is this a value buy now? And I still think it's a bit of a value trap. I mean, just because prices had gone down at some point, due to the drama they were facing. But at this point, no, we're not biting on it just yet. I think that this is one we're happy to hang on to when we have a small position in. But like I said, I think that there's better opportunities out there, and it's not that TD's a bad company going forward. It's just that we think that there's better opportunities.
We're awaiting results from the Big E, Royal Bank, in a week's time. Is that a stock you own currently?
Yeah, it is. I mean, when it comes to Canadian banks, Royal is still, the tops of the top for us in terms of how they've executed, certainly the brand and certainly the diversity of the company. So we still love Royal, and actually we're seeing them. I think we're going to see an uptick going forward. I think they're making the right moves. We're starting to see buybacks, which I love buybacks. So overall, I think that Royal is very well positioned. I think they're very strongly positioned to do well in the United States. Which, as I said, it's the exact opposite with TD, obviously. But I think that Royal is very well positioned in the U.S. and is going to do extremely well there. And so where we don't see growth prospects with TD, we see a lot of growth prospects with Royal. And we're very happy to hold Royal as part of our core holdings going forward.
And the stock not cheap, but you think that's justified?
Yeah, I wouldn't say this is a deep value buy, but when you're comparing the banks, we still, based on what the growth that we expect going forward, we still think you're entering at a good point with Royal at this point. So, yeah, it's not a deep value stock by any stretch, but we think you're going to do very well over the next few years by holding on to this. And again, you get paid pretty well to wait when it comes to Canadian banks with dividends. So, it makes it a little bit easier to jump in at a fair price.
And finally, give us your thoughts. We're tight for time, but on National Bank.
Yeah, National Bank, completely different story as well. National Bank, I think, is one that I love to ignore, unfortunately, because they continue to execute at an extremely high rate. I really like their Canadian Western Bank acquisition. I think that gives them more depth in a number of areas, especially related to lending across the country. So we're starting to see that come online for them now. I've been chatting with my friends over at National Bank over the last few weeks, and they're excited about the prospects of new product lines and new customers that they can bring into their lines, especially when it comes to lending and commercial lending. So I'm excited for National Bank. I think that they've done an incredible job of execution. They're They're well run. They're well managed. Like I said, it's one that I've tried to ignore over the last few years as I've been looking for more growth opportunities in companies like Royal. But National is the one that just keeps giving on a regional rate, and it's doing very well, and I expect them to continue to execute at a high rate going forward.
Grant has very kindly agreed to stick with us for a second block. We have seen the markets rallying lately. The Toronto Stock Exchange hitting record highs. Grant says there's evidence that this may not be a sucker rally, a head fake. We'll be right back.